Okay, so this is question number 5, cash flow statements. And the problem says, Carl Company reported net income of $320,000 for the current year. Depreciation recorded on buildings and equipment amounted to $65,000 for the year. Balances of the current assets and current, my paper's folded, current liability accounts at the beginning and end of the year are as follows. So it has a whole list of accounts there and it says end of year and beginning of year. Now remember, it might say, instead of end of year, beginning of year, it might say 2020, 2021, or something like that. So you're always going from the older date to the newer date. Okay, so in this case, you're going from the beginning of the year to the end of the year. If you were going from 21 to 22, you would go from 21 to 22. Okay, you're always kind of working in that direction. So determine the cash flows from operating activities using the indirect method. So we always start with net income, right? Net income comes first. Well, the title of the company would be at the top, right? Carl Company, and this would be a partial statement of cash flows, and this would be for the date. They don't have a date, so we're gonna. It says year end. We're gonna assume it's December 31, and we're gonna say 2020 because it's 2020, right? All right. So the first thing that you have is net income. Okay, and so the net income is listed someplace within your problem. In this problem, they're telling you that the net income is, hold on a second, I'm just formatting this here. Net income is $320,000, okay? So $320,000 is our net income. All right, oops, what was that? 320,000, 320. There we go, 320,000. Okay, the next line is that title that is a long title, and the title is called Adjustments to Reconcile Net Income to Net Cash Provided by Operating Activities. Okay, net income to net cash provided by operating activities. A really long title. Okay. All right. So, trying to think how to do. Went through the same problem last time with it doesn't line up well in here, so I'm gonna have to move this over there. There we go. Okay. So let's go ahead and do the adjustments. So remember our list that we had, our list of things that we look for. We go through and we look for everything in the list. Even if we don't see the item, we don't deal with it, but we should be looking for everything in that list in order to work through, right? So the first thing we want to look for is depreciation. Does this problem have any depreciation? Yes, in the beginning paragraph, it says depreciation was $65,000. So the rule says that we add for depreciation expense. So we're going to add for depreciation expense, and we're going to indent this. So depreciation expense was $65,000. Okay. The next thing we're going to do, well, if there was also amortization, that would go there as well. But I've never seen amortization come up in the 6 years I've been using this text. So I don't assume it will come up, but it would be amortization, depletion, or depreciation. But I think you're just going to see depreciation. Okay. Then we're going to add for any losses or subtract for any gains. And I don't see that mentioned anywhere in the problem here. So if it's not mentioned, you just go down to the next item in your list. So the next item in your list is we're going to add for decreases in accounts receivable, or we're going to subtract for increases in accounts receivable. So if we look at this, we go up above, we don't do anything with the cash number. We go to accounts receivable. We see that accounts receivable went from $32,000 in the beginning of the year to $17,000 at the end of the year. So there was a $15,000 decrease in accounts receivable. So it's a decrease in accounts receivable. And the rule says when there's a decrease in an asset, we add. So we're going to add $15,000. All right. So since there's a decrease in accounts receivable, we know there's not an increase. And then we're going to go to the next item, which is inventory. We add for a decrease in inventory, we subtract for an increase. So let's see, do we have inventory? Yes. So inventory went from $65,000 at the beginning of the year to $55,000 a year. So it was a $10,000 decrease. So we have a decrease in inventory. So for a decrease in inventory, we're going to add. All right. So the next line after inventory we're going to look for is going to be prepaid expense. Yes, we have prepaid expense. So it went from $5,000 at the beginning of the year to $7,500 at the end of the year. So there was actually an increase of $2,500 in prepaid expenses. So increase in prepaid expense. So for an increase in the prepaid expense, an increase in an asset, you're going to subtract. So we're going to do $2,500. We're going to subtract that. Oops, I did 255. 2,500. Okay, $2,500. We're then going to go down to, there's no other assets there. So now we're going to go to the liabilities, and the liability, first liability, any payable. So we have accounts payable. So accounts payable went from $18,000 to $11,000. So there was a $7,000 decrease in accounts payable. And the rule says that when it's a decrease in the liability, you subtract. And so the difference in the accounts payable was $7,000. So we're going to subtract $7,000. We're then going to go to the next line down is income taxes payable went from $1,200 in the beginning of the year to $600 at the end of the year. So that is a $600 decrease. So we have a decrease in taxes payable. And so the decrease is $600. So we're going to subtract $600. And that's all we have. That's all the items that we have. So we're actually going to put the total of the whole column on the same line as that decrease in taxes. So we're going to take $65,000 plus $15,000 plus $10,000 minus $2,500 minus $7,000 minus $600. Oops, that's not what I wanted to do. I wanted to do the sum of it there. So the total of that should be 79,900. Yes, for any kind of minus, you can do a minus or a parentheses. Either one means minus. In accounting, they generally do the parentheses just because when you're doing it by hand on paper, it's really easy for a minus sign to get lost. The parentheses are easier to see. And I'm just looking here. This has to do with the format. See the format down here? So I just have to change the format. So there we go. Now it's in the parentheses.
So just to make sure on the test, do we just put parentheses too, like we did on the homework, or?
Yep, either one. Yep, it's just like the homework. Okay, so now we take the 320 plus the 79.9 together. And that's going to give us 300, or oops, what did it do? Sorry. I don't know why this thing keeps doing this. 320 plus the 79.9 is $399,900. So that is called net cash provided by operating activities. Net cash provided by operating activities. All my spelling there. All right, so that's a good screenshot of what that page should look like. All right, so that's question 5, or cash flow statement, operating activities, indirect method. Okay, I'm going to stop this recording.